Will the Fed minutes be a turkey? They have been in the past because investors look to them for guidance, and they haven't been getting it from the Fed. As the Lindsay Piegza comments noted, the Fed has been kind of all over the place, except that the markets have now taken that they are probably done. So on the left-hand side, the dot plot showing one more rise this year is probably no longer active. Would that be reflected in the minutes? That's an interesting question because at the time, as you noted there were a lot of different reasons for the Fed to think that they could raise rates because the economy was strong. So what is it that led them to hold rates where they were? You look at what had been happening with GDP and CPI. We've got obviously updates to those since the last Fed meeting, but they basically are betting on the fact that both of those lines will continue going down, that we'll see growth slow and inflation continue to fall. Can we get a reason for that? Can we get their thinking behind why they thought those lines would do that? What Wall Street really wants to know is what are the odds that either of those lines changes direction, and what are the criteria for raising or lowering rates? How long is longer and higher for longer, and when or if we land, soft or hard landing? Those are the questions we'll be looking for answers to in the minutes, but the Fed is probably not going to give us a whole lot, which leaves us where the markets are right now, pricing rate cuts coming fairly soon in 2024.